Gordon, I want to get your response not only to the delivery numbers, but to what Gene just said about defining a growth story. I have a feeling you're a little more skeptical about it.
Yeah, we think the fourth quarter, the year-over-year growth is irrelevant. Look, we think the fourth quarter is what matters. What happened in the fourth quarter of last year is Tesla effectively had fully passed through the massive price cuts in China, and its Shanghai facility was fully ramped. When you also consider that they've effectively picked the low-hanging fruit of entering the world's largest three auto markets, U.S., China, Europe, and their sales grew just 2% quarter over quarter, despite 15 price cuts in the first quarter of this year, 18 price cuts over last year, and 52,500 more cars of capacity sold. They didn't have any chip problem. They produced more cars in this quarter than they did last quarter, and they grew just 2% instead as a big problem. One other thing, keep in mind, they sold significantly less higher margin Model S and X cars in the quarter and significantly more lower margin Model 3 and Y cars in the quarter, which we calculate is going to be roughly a $300 to $500 million hit to their bottom line. So you're looking at a company, a high-growth company that's barely growing, that's losing more money doing so, is going to see all of its credit sales disappear next year. Look, these guys are valued at $700 billion. They sold 184,000 cars. VW sells about 2.5 million cars a quarter. They're valued at 162 billion. And Tesla grew sales just 2% sequentially. You don't know what people are talking about when they say this is transformational growth. 2% is not transformational when you cut your prices 15 times and you have 52,000 more cars of capacity.
Yeah, Gene, I mean, just to dig into that a little bit more, you do have that sunsetting of tax credits, at least for now. We'll see what this proposed infrastructure plan actually brings to the table and manifests as reality. But the production numbers, do you expect those to ramp up? And when you do look at other emerging competitors like GM, are they going to cut into market share?
Morgan, if it's okay, I'd like to talk about the 2% comment.
Okay.
Can we back up one step there? It's true, it grew 2%. The challenge with that, my challenge with that logic is that it's a seasonally light quarter. Typically, auto sales in first quarter are down from December, so I think that is a clearly positive. And then I want to jump to the substance of your question around competition. Is that this is ultimately the biggest risk to Tesla, is that the traditional cast of characters, traditional OEMs get their act together. We talked about the electric Hummer. I'm a little bit skeptical that that's going to get any sort of mainstream traction, but that is the risk, and you will see Tesla's market share decline. It's 80% in the U.S. It's a much lower. They're losing share in Europe. I think that will reverse when they get the new factory there, but. That is the question. I would just point to this piece around competition as investors contemplate the impact of competition. Tesla started out as a high-end brand, a wealthy person's brand, and they are successfully navigating that brand globally to an everyday person's EV brand. And the reason is that the value of the car exceeds the competition. If they can maintain that edge, I think that competition will, yes, they'll lose share, but they'll continue to have a measurable piece of a massive addressable market.
Shepard Smith here. Thanks for watching CNBC on YouTube.